Our investment philosophy could also serve as rules to live by. Stay balanced, maintain flexibility, be risk aware, and collaborate with others. Staying balanced is easier said than done. At BentOak Capital, staying balanced is threefold: a balanced asset allocation, strategy selection, and perspective. Asset allocation is straightforward. It's what most folks refer to as diversification, having a mix of stocks, bonds, and cash to generate stronger risk-adjusted returns. But asset allocation is where diversification should start, and unfortunately, many investors and advisors stop there. The ultimate factor in true diversification is being balanced in strategy and selection. Building a diversified portfolio utilizing multiple strategies and styles, passive, active, tactical. That is true diversification, the diversification of strategies, not just holdings. The final aspect of staying balanced is to keep a balanced perspective. Extreme beliefs and emotional reaction are an investor's biggest enemy. Our clients benefit from our level-headed and practical approach to the markets. You won't find us with our head in the sand or swinging at wild pitches for home runs. We are committed to a sensible, long-term approach.
When it comes to investing, there are many reasons why maintaining flexibility is key. At BentOak Capital, we realize that passive, buy and hold strategies may work in theory, but in practice for the average investor, they take an inordinate amount of discipline and a nearly infinite time horizon. We believe in maintaining flexibility to rebalance in volatile times and take advantage of market prices. We believe in maintaining flexibility in our allocation for long-term return potential. If our long-term outlook for a certain market sector is poor, or if we don't trust the financial data reported by Chinese corporations, why on earth would we invest our clients' money there? And finally, we believe in flexibility because the financial markets and our clients' lives are uncertain enough to require it. Events like the financial crisis and recent pandemic not only bring volatility to the financial markets, they bring heightened uncertainty to individuals' personal finances, whether that's job security or even being required to shut down a small business. We are committed to maintaining flexibility for clients, not locking them into rigid investments or platforms should life's events change their objectives or goals.
Now, when it comes to risk, BentOak Capital believes that you should address two things that are clients' tolerance and their risk capacity. Now, we determine an investor's risk tolerance through a series of questions and discussion. This helps us to understand what type of investment risk a client is comfortable assuming. You can think of it as determining your maximum threshold for pain when you're investing. We then balance a client's risk tolerance with their risk capacity. Being willing to take risk is one thing, but actually being able to take risk is just as important. In other words, you may be willing to assume a high level of risk, but if you are retired and living off of portfolio distributions, you don't have the capacity for high risk. We also spend a great deal of time understanding the risk metrics within our models. We stress test our portfolios for different scenarios such as bear markets, interest rate increases, oil price shocks, and corporate defaults. This helps keep elements of surprise at the top of mind. What could catch us off guard, and are we allocated prudently? In any given year, the stock market corrects by 5% at least 3 times, more than 10% once. However, the drawdown of 30, 40, or 50% corrections is what we need to be protecting against. And we do that through diversification and our ability to slightly adjust risk exposure over time.
Our portfolios are a group effort. We have an in-house investment committee that meets regularly to review holdings and models. It's important to collaborate and make portfolio decisions at a group level because it removes some of the biases that we may have as individuals. Even as professionals, advisors often fight the same cognitive biases that plague individual investors. We are all human. By having regular dialogue, our advisors can gain a greater perspective and ultimately make more informed investment decisions. Beyond our investment committee, we also work with multiple large third-party investment firms that provide feedback on our model portfolios. This extra layer of analysis helps us address groupthink from within our firm by providing an outside point of view. At BentOak Capital, we believe we are all better together, and our investment management process exemplifies our collaborative nature.